Welcome. Today we start our lecture series on IAS 37, a standard that covers provisions, contingent liabilities, and contingent assets. This first lecture is purely going to be an overview, and we're going to focus on provisions and contingent liabilities for a few moments. We'll deal with contingent assets later on. So let's start this overview lecture. I like to lay out standards in a mind map. So IAS 37 builds on top of the concept of a liability from the conceptual framework. Okay, so let's take a step back quickly. Under the framework, we dealt with the definition of a liability. It revolved around three main things and must have been a present obligation resulting from a past event. The result in settlement will result in an outflow of economic benefits. Okay. Then the framework also had two recognition criteria, namely that the outflow must be probable and the amount must be reliably measurable. Okay. If all of these definition and recognition criteria were met, then you would recognize in the statement of financial position as a liability. Now, IAS 37 deals with liabilities and contingent liabilities. A liability that is a provision will be a liability with uncertain timing or amount. So we still have the present obligation, okay? But the settlement of that obligation revolves around an uncertain timing or amount. The recognition criteria states here that there must be a present obligation as a result of a past event, okay? Exactly the same as what we discussed under the framework liability. Often we'll talk about the avoidance test, but please, for present obligations, there will be two types, legal obligations and constructive obligations. Okay? Legal obligations are obligations that arise from a contractual obligation, okay, or act of law, whereas a constructive obligation is an obligation that arises because the company has behaved in a manner that creates an expectation. Okay. Then the other recognition criteria, the outflow must be probable and a reliable estimate of the amount must be able to be made. Okay, so here the reliable estimate is more likely than not. Whereas under framework, yes, we're still talking about more likely than not, but it needs to be a lot more certain. Okay, so we go down the scale of uncertainty, framework, virtual certainty, so very sure, down to provision, more than 50%, i.e. more probable than not. But I want you to note something here, please. Yes, the framework, liability, definition and recognition criteria would result in the recognition of a liability. When I say recognition, it would go onto the statement of financial position. Provisions, well, those are still liabilities that are recognized in the statement of financial position, but we do put them on a separate line item from the other liabilities and accruals and give extra disclosures about the uncertainties regarding timing or amount. But if we now move on to contingent liabilities, the definition is either a possible obligation or a present obligation, but the outflow is not probable, i.e. less than 50%, and or the amount cannot be reliably estimated. So here we are working even further down in terms of our probability of outflow. So on this side, we are less than 50%. Okay, so the outflow is not probable. Okay, but I need you to just take a step back. There are two aspects to this definition. Either it's an obligation that is a possible obligation, or it's a present obligation, but with the present obligation, the outflows are not probable or the amount cannot be reliably estimated. Very important later on when we deal with standards such as IFRS 3 that comes back and talks about contingent liabilities once again. So please differentiate between the two. So what's all the hoo-ha about? Well, in the scenario where I have a contingent liability, there is no recognition. Okay, so I have no figure in the statement of financial position. But what I do is I disclose in the notes only, okay, some information about the contingent liability. Thank you very much. Please continue with the next set of videos. This is purely an overview to get you started. Thanks.